Hi, I'm Matt Collins. I'd like to welcome you to Bob Weber Auto Mart on Douglas Avenue here in Racine, across from Douglas Park. We specialize in 1-year-old, low mileage, almost new cars. And if you'd like to stop by and see them, or see them on our website, bobweberautomart.com, we could save you between $5,000 and $10,000 on your next almost new car purchase.
I'm Michael Burke, and this is Money Talks. Hi, welcome to Money Talks, the Journal Times online business show. I'm your host, Michael Burke, business reporter for the Journal Times, and today, Keith Pollek, the president and CEO of Fox River State Bank in Burlington. You have the distinction of being the very first banker on this show, so you're a one of a kind so far. Thanks a lot for being on the show. Fox River State Bank, it's a smallish bank, right? What do you guys have in assets currently?
About $85 million in assets.
Mm-hmm. And that puts you kind of on the small side, right?
It does.
Even though $85 million sounds like a big number to some people, it's not really big in the banking world. This year, Fox River comes up to its 10th anniversary,
Correct.
10th year anniversary. Who founded the bank and why?
It was founded in August of 2003 by a couple of local bankers who had been working for a large bank, and they, in concert with several local business people, felt there was a strong need for a group of local decision-making people in a bank. As the big banks continue to drop charters throughout the state and make these branches instead of individual banks, there really seemed to be a need for a bank that was headquartered right there in Burlington, and all the decisions were made right there in Burlington. Customers, when they come into a bank lobby or they call and they need an answer, they don't want to be told you need to call our 1-800 number or you need to go online to find that out. A lot of times people want to meet with a human being to get an answer to their loan request, problem with a credit card, issues with their home mortgage. They want to talk to a real live person. That's where community banking really excels.
And that's going to be our theme today, is community banking. That's the reason you're on this show, to talk about that. What do you guys even have any branches?
No, one location.
241
East Jefferson Street.
Okay. What is the sort of current state of banking? Both at the very local level,
sure,
and on Wall Street. And what I know, one of the reasons you're here is you want to clarify that you're not playing the same game that those on Wall Street are playing, the big investment banks. So what's the distinction? Talk about that.
That's a great question. It's something that I think gets confused a lot. When an investment banking firm loses $8 billion on a hedge fund trade, I have friends, including occasionally one of my brothers from California, call me and say, what's going on with banking? Well, it's really different. I mean, when you're an investment bank, you're taking a position in the sale or acquisition of a company many times, or you're trading derivative products, which are really over my head, but very complex financial instruments. We don't do any of that. In the community banking world, we're all about kind of the George Bailey, It's a Wonderful Life. It's bringing in local deposits and making loans to local individuals and local businesses. So I really try hard to differentiate between community banking and Wall Street investment banking. I think there's a big difference. I think we fit different needs within the whole United States economy.
Need is an interesting word in relation to the Wall Street investment banks who are playing around with derivatives and things. I question whether there's any need being fulfilled there at all. How local are you in where you invest your money? Would would you make loans in Waterford, for example?
Oh, certainly.
Okay.
You know, we really look at Burlington and the surrounding areas around Burlington is really where we're focused in.
So how far what's your radius of interest?
You know, I haven't calculated the miles, and nor do we have anywhere in our Community Reinvestment Act statement number of miles. So I don't have a good answer to that, Nick. Sorry.
Mm-hmm, mm-hmm. Yeah, yeah. So talking about the current state of banking, how much demand is there for money right now, and how available is money? Because I've heard anecdotally, people who say it's impossible to get loans from banks right now, that the requirements are so stiff, or they want so much collateral. I do hear that anecdotally. What's
Sure.
from your side of the table?
And Mick, I hear that too. One of the looking here at a report that came out from the governor's office, January 2013. They did a review of businesses throughout the state, and they asked them what was the most important challenge facing their business today. Availability of credit was the top concern of only 4% of the responders. Health insurance, decreased demand for their product, complying with federal regulations, complying with state regulations, availability of skilled workforce, and increased competition labor costs, all those rated as higher areas of concern than availability of credit. So from our standpoint, and as I talk to bankers, not just across the state, but across the country, we're looking for opportunities to lend.
Mm-hmm.
And in fact, business lending was up last year, 2012 versus 2011.
Mm-hmm. I think it depends. How is that question asked? If they're asked their top concern, they would answer differently than if they were asked to list their concerns. And I wonder what that number would have been, if they had just said, "Give us your concerns," and then maybe, who knows, 20% might have said, "Yeah, that's one of my concerns."
You're correct. The question was asked, what was the most important challenge facing their business today? Correct.
So how much demand do you feel for money these days? Are you getting, how often does, in the world of business, in the world of commerce, how often does somebody come in and say, "I'd like to sit down and talk to you about a line of credit or money for an expansion," or something like that?
Right. Great question. Both on a business side and individual side, it's down dramatically. I think my perspective is that we as a culture became very enamored with debt over the last few decades, and I think the recession we have been experiencing and still are experiencing has made a lot of people quite nervous. I think they also look at the federal government, and they can't get its act together on spending.
Yeah.
Individuals don't have a printing press in their backyard or their garage where they can print money for themselves like the federal government continues to do. So that has made a lot of businesses nervous. They're reluctant to add on to their building, or reluctant to buy new equipment, or most importantly, reluctant to add new employees, which really is what gets our economy going.
Yeah.
On the same side, individuals. We see fewer people really interested in taking on a lot of debt. So there's been a definite decrease in borrowers' interest in borrowing more money.
Yeah, interesting. So you couple the sort of lessons learned during the recession that clearly trickled down to the household level.
Right.
You couple that with the craziness in Washington and the talk of the sequestration and all of those things. You mentioned your bank wants to make loans, is willing to make loans. Are your standards the same as they would have been, say, 5 years ago?
I think as an industry at all, Mick, and as well as our bank, banks' lending standards have changed. I don't think there would be too many bankers that would argue me with that. I think we've all learned from the situation that it swayed too far, pendulum swayed too far one way. I think for a while there, especially with regulators coming down real hard on banks, it immediately swung too far the other way. We're definitely back more in the middle now, and banks in general are looking for opportunities to lend.
And how much of the new cautiousness is voluntary and how much of that is regulatory? And I'm really interested in your opinions about Dodd-Frank. I got that right, didn't I? The Dodd-Frank Act?
Correct.
The one that was supposed to sweep away all the craziness in the banking world and get everybody to sort of toe the line and act rationally. What's your opinion of that act?
Well, and I think you've seen the results of that. It hasn't accomplished what was it proclaimed that it was going to go after. You know, the whole Dodd-Frank was over 2,300 pages. The act itself. Since then, about half the rules have been finalized. 136 of them have been finalized.
Wow.
There's still another 129 rules to be that are pending. Out of those 136 rules that have been finalized, we've got over 9,000 pages of new regulations.
Wow.
If those regulations, my bank is 20 employees. So for me to comply with all those new regulations, if I have to hire one new employee, well, that's a 5% increase in my new employees. If a big bank with 1,000 employees or 10,000 employees or even more has to hire one more employee, not such a big deal. So the small banks...
So it's unfair. It's
well, the
not...
small banks are getting hit a lot harder by these regulations. In addition, you're seeing more and more talk about consolidation of the banking industry.
Mm-hmm.
The small community banks that are in the local community looking for local needs, I'm concerned that more and more of those are going to go away. And taking away from smaller communities, taking away from small community banks, you know, the bulk of our new companies and the bulk of our new jobs every year come from small companies. And it's small banks that lend to those small companies.
Yeah.
So I'm really concerned about what the long-term impact of that could be on our economy.
If our government had the desire and just made that act disappear tomorrow, what should it be replaced with?
Wow. Vic, I don't have a good answer to that.
I mean, certainly, you wouldn't disagree there should be some regulation.
We have to have regulation in our industry. But keep in mind, for the most part, most banks are anywhere from 8 to 12, maybe 15% capital. So that's the owner's equity. The rest of the money that we're working with is our depositors' money.
Mm-hmm.
So we need to have regulations. But we need to have regulations that are supportive of helping individuals as opposed to making it punitive. The whole concept of creating the CFPB, Consumer Finance Protection Bureau, has made it more expensive, more difficult. And it seems like every time new regulations come out, the people that it's designed to help, it really doesn't help. For example, drive down a highway. How many times have you seen a big billboard and then on the bottom, real tiny little print that no one can read from your car? Well, technically, they comply with some regulation. Or you listen to an ad, and at the end of an ad, somebody talks really fast for about 5 seconds. Well, can anybody really understand that? So once again, technically, they're in compliance with the regulation. But has it really helped the individuals we're trying to help? I don't think so.
Yeah. Boy, a tough environment. And I know you, speaking of a tough situation, for as long as I've been covering business, I watched the news release battle between the banks and the credit unions.
Right.
And, you know, we're better or those guys are bad, and kind of back and forth. And it seems like both are pretty much in the same ground. I mean, nobody's really swayed anyone that I can tell. But you have some pretty strong thoughts about credit unions and whether credit unions, which I think try to sort of position themselves as the good guys, you know, word for the numbers. But you have some thoughts about credit unions and whether the laws are fair to the banking side.
Yeah, and I don't look at it whether it's fair to the banking side, more so is it really fair to the taxpayers in general. Credit union industry is now $1 trillion industry. So this isn't just a little, common bond, little credit union for a labor union, although there are still those out there which do an excellent job, or a specific ethnic community which really fulfill that initial role that credit unions had. But keep in mind when the income tax was implemented back in 1916, that's almost 100 years ago, credit unions were one of the industries exempted from paying income tax, because that's all credit unions were at the time. So let's fast forward to 2013. There are now 7 $1 billion plus credit unions in the state of Wisconsin.
Wow.
7 of them.
Wow.
They don't pay income tax. They don't have the same regulations that bank do. For example, back in the 70s when the Community Reinvestment Act came into play, where there was concern about financial institutions delineating communities and not serving the needs of lower income people, that only applies to banks. Credit unions don't have to comply with that. So when the recent survey came out that the average income of a person that uses a credit union is far higher than the average person that uses a bank.
Is that right?
That is
I didn't
true.
know that.
It seems to me like these multi-billion-dollar credit unions should be looking at ways to become a bank, because they're behaving like a bank, they're doing everything like a bank, and yet right now they're lobbying Congress. The law right now allows them to have 12.25% of their assets in business loans. However, any loans $50,000 or smaller are exempted from that limit. So they can make as many small business loans. So for them to be in Washington, D.C. right now lobbying for the authority to go up to 27.5% of their assets really doesn't make sense. And if they really want to go up to 27.5% of their assets in business loans or more, guess what? They can convert to a bank charter.
Yeah.
And they can do as many as they want. But when you start seeing credit unions, which we now have, sponsoring a college football bowl game out of San Diego, when you see credit unions sponsoring sports facilities, or as I drove into Racine today for this show, coming from Burlington, I went past a credit union that sells cars. Really?
I know what you
Is that really what we want to be doing? We really want to. Why aren't credit unions then? Why aren't they selling houses?
I believe they had to divest that. I believe that's now run
Well,
as a private business. But you're right. For a while, it was. I know
So
Educators Credit Union, because I've reported on this, so it's not a secret.
So at some point, I think we need to look at those credit unions that are still fulfilling their initial need that was set up in credit. Great, let them be credit unions. But those that want to behave like banks, instead of sponsoring college football games and building multi-million-dollar facilities, have them come pay taxes. Have them be treated like a bank.
Yeah. We're getting a little short on time, but I wanted to just touch on one thing very briefly, and that is you came to Fox River State Bank in about 3.5 years ago.
Correct.
When the bank was in the midst of some trouble. It was federal and state regulators had given it orders to get its ship righted, and you have been able to do that. Just very briefly, how did you guys work your way out?
You know, the real key was, one, identifying the problem loans that did exist in our portfolio and deal with those appropriately, and then 2, raising more capital. And I'm blessed with working with a great staff that really, we've all worked really hard in correcting those situations. And 2, I'm also blessed with a great board of directors. Much of the capital that we've raised, a majority of it, came from the board of directors. And the board really...
We're talking about $2.5 million worth of new stock, I believe, right?
Correct. And
Just on the board.
Correct.
Yeah.
And even more than that, because in the second capital issuance that we did, they contributed about 80% of the new capital we raised when we did the second issuance. So they really believe in the Burlington community. They really believe in having a local decision-making bank, because we are the only bank that's headquartered in Burlington.
Mm-hmm. Well, Keith Pollek, CEO and President of Fox River State Bank, thanks for being with us on Money Talks today.
You're welcome.
You've been watching Money Talks with Michael Burke. I'm the business reporter of the Journal-Times. Thanks to our producer today, Scott Anderson, and please watch us again.
Thank you.
Thank you.